Wherever you go, everyone says there's going to be a UK housing market crash in 2023. People think property prices are going to plummet. I'm going to go out on a limb. I don't think they're going to plummet at all in 2023. In this video, I'm going to lay out exactly the reasons why we are not going to expect a crash. I'm going to explain what the smart money is doing in property right now and how you can benefit from all the turmoil that's going on. Before we get stuck in, let me tell you about the Baker Street Property Meet, the UK's #1 and largest property investors networking meet. Our last meeting of the year is Wednesday, 30th of November. We have 300 people come and join us each and every month in central London. This month's theme is all about cash flow, because cash flow is going to be absolutely critical to your success in 2023. So come and join us in central London. You can get your tickets at bakerstreetpropertymeet.com. It's the last one of the year. It's going to be a full house. Tickets will sell out before the event. Grab your place, bakerstreetpropertymeet.com. See you guys there. Wherever you look right now in the media, there seems to be a whole lot of doom and gloom, and in particular on the residential property market and what's going to happen to prices and the housing market in the UK in 2023. A lot of people are predicting a crash, and they seem to be going full on with this argument. But I'm going to go against the grain on this one, because I genuinely do not believe there's going to be a property market crash. And guess what? Warren Buffett actually agrees with me. Now, there's a reason why doom and gloom is predicted by pretty much all, and that's because it gets clicked, it gets read. People seem to be fascinated and drawn to doom and gloom stories. And I think people have over-egged what is going to be happening with property prices in the UK. In fact, the very term property crash is very, very emotive and is bandied about all over the place. But what exactly does it mean? A crash actually means a 10% fall over a 52-week period. Any other fall is just a market correction. Property price crashes are relatively rare in the UK. And what I see for 2023 is a correction. So why don't I think there's actually going to be a crash? Well, there's some specific reasons why things are completely different to the last crash that happened in 2009. There's an old saying which says, generals spend time preparing to fight the last war. So the reasons behind the last property crash was a problem with mortgage lending, which the banks were forced to fix after 2009. If we take some time to understand the key differences between mortgage lending now and in 2009, we can actually figure out whether the rising interest rate environment is actually going to lead to a crash like it did back then. Now, the first key difference between mortgage lending in 2008 compared to now is the popularity of fixed rate mortgages. Now, in 2008, 60% of all mortgages were variable rate. Now, that means on the day interest rate rises, your mortgage rate also rises that month. Today, the number of people on those variable rate mortgages has gone down from 60% to just 5%. The majority of homeowners are on fixed rate mortgages, which means they have fixed terms of 2, 3, 5, 7, and some even 10 years. What that means is if rates rise in the short term, then most householders are protected from those rises in the short term by having fixed rates. Remember, one of the main reasons a crash happens is that people can't afford their mortgage payments en masse, and those people have to sell up. And they are motivated sellers that have to sell quickly, and they have to sell at a discount to market value. And the rush of these people all exiting for the door at the same time means that there's a rapid drop in prices and hence a crash. And that danger point of majority of people being on variable rate loans simply isn't there today. The second thing that's changed on mortgage lending is the popularity of repayment loans. Back in 2008, just over 50% of all house loans were on interest-only mortgages. That means people just paid back the interest every month and they didn't chip into the capital what's owed. Today, only 20% of homeowner loans are interest-only. The rest, 80%, being capital and repayment. That means each and every month they're paying back some of the loan. That means the loan to value they're borrowing is going down each and every month. That also leaves that homeowner less exposed to the spectre of negative equity, which happens when everyone's on interest-only mortgage. Negative equity, of course, being when your house mortgage is more than the value of your house. That scenario is unlikely to happen with the majority of people on repayment mortgages. Now, the third change that's happened since 2008 was affordability test. Now, in 2008, 50% of mortgages, this is quite shocking, 50% of household mortgages were granted without any proof of income or any affordability checks. You could practically show a pulse and a thumbprint and get a mortgage back then. From 2015 onwards, there have been far more stringent mortgage affordability checks, with proof of income being required and also stress testing being carried out. So homeowners basically have to demonstrate not that they can pay the interest rate at the current market rate, but can pay it up to 5.5%. So those people that have had a mortgage in the last 7 years or so have basically got mortgages where they have had to demonstrate proof of income and they have been stress tested by the bank that they can pay at today's interest rates. Now, those three factors, of course, and the statistics I've given you are all about the owner-occupier market, the residential market, as opposed to the buy-to-let mortgage market, which is slightly different. But do remember, the residential homeowner market is pretty much 90% of the overall housing market in the UK, and that is the main driver of property prices. And remember, it's not just me who says there ain't going to be a crash. Warren Buffett agrees. I'm going to tell you exactly what he's doing at the end of this video. If you're new to this channel, make sure you subscribe, hit the bell icon. We put out new videos each and every week. Make sure you like and comment and let us know what you think as well. So a crash in property values will mean that we'd fall by more than 10% on average over a 1-year period. Now that happens when a lot of homeowners are rushing to the door at the same time to sell their properties. And that mass exodus all at the same time means that there aren't enough buyers to mop up those properties, and therefore property prices fall rather rapidly. For the reasons I've outlined, that situation simply is not going to happen in 2023. But there is something that has crashed, and has crashed big time since 2020, and that is the value of the pound in your pocket. The UK currency has fallen by 30% in value since 2020. And that's because of all the massive money printing that's gone on in the UK, and which has led to rampant inflation, which has meant that our currency is not worth so much compared to stronger currencies around the world, such as the US dollar. Why is that important? Well, around the world, there are a lot of cash-rich investors out there, and pound sterling is cheap. And we have long-term fundamentals on housing in the UK. We have an ever-increasing demand for more and more houses each year. And because of political ineptitude, we seem to lack the ability to bring in the rules to allow these houses to be built. So there's always going to be a massive structural imbalance between the housing need and the housing supply. And people around the world recognize that demand, and they recognize the fact that the pound is cheap compared to their currencies, and they're looking for opportunities to come in and invest in UK property. But if you read the papers, which really should come with a health warning or wealth warning for entrepreneurs, you will think that there's so much doom and gloom in property, and you'll also think that everyone is selling up. I seem to read every week some story about landlords are selling up. I mean, it is true, since 2017, 250,000 rental properties have been lost due to landlords exiting the market. But these are primarily accidental landlords, people that bought a property to live in and for whatever reason moved out of that property to move somewhere else and decided to let out their former home. In other words, they never intended to set up a property portfolio as a business. Now, those people have been ravaged by the Section 24 tax, which is basically a tax on your mortgage interest payments. And for high-rate taxpayers, that is deadly. And it basically means that if you just have 1 or 2 properties and you own them in your own name, and you are an accidental landlord, then it's simply not worth owning them, and those sort of people have been selling up. And also the regulation on buy-to-let has increased a lot over the years. And you need to have certain economies of scale in terms of number of units in your portfolio to make sure that keeping up with all this regulation is actually worthwhile. And if you've just got one or two properties, it may not be worth it. And for many reasons, those type of people have been selling and exiting the market. But there's no evidence at all that people with established property businesses who weren't accidental landlords, but entered property with intent, clear intent to set up a successful property business. There's no evidence that those sort of entrepreneurs are selling up their portfolios. Now, as I mentioned, I don't see a property market crash in 2023. I see a correction. I see what's happening is obviously the rate of growth is not going to happen anymore. We've seen month-on-month growth in prices all the time. That will plateau and that will fall a little bit. We won't hit that 10% nationally to be regarded as a full-on crash. As a property investor, you are not really that bothered about minor corrections along the way because you buy and hold property usually with at least a 10-year holding plan. And what happens when the market or house price growth plateaus a little bit or corrects a little bit is that rental demand goes up, rental prices goes up, and the cash flow from your rental investments actually goes up. We'll get back to the video in just a moment. What is the most exciting opportunity in property right now? And that is repurposing defunct commercial buildings to residential use. Now, most people don't really know where to start, what to look for, and how to exploit these opportunities. And that's why I've prepared 90 minutes of free training for you to get you started on this wonderful journey. You can register for this free training at property-workshop.com. Join me on that free training, and I'll leave you to enjoy the rest of the video. Now, I've banged on about there not being a crash in 2023, and I said Warren Buffett actually agrees with me. What do I mean by that? Well, Warren Buffett is one of the richest people in the world. He runs a company called Berkshire Hathaway, and they invest in other companies like Apple and Tesla and all these other people. Now, a lot of stock market investors, actually what they do is they look at the stocks that Warren Buffett is buying through Berkshire Hathaway. And they basically mirror his investments because he's done so well over the years. What's Warren Buffett doing right now? Well, believe it or not, he's set up a below market value website to buy single family houses across the US from motivated sellers. Now, the US housing market has similar characteristics to the UK, and you can see that Berkshire Hathaway is very keen on investing in rental housing in the US. In the UK, Lloyds Bank have stated their intent to become the UK's largest private residential landlord by buying up single-family units. What's going on here? If I was a conspiracy theorist, I'd be saying that really they, the elite, are trying to smoke you and me out. They're trying to give us all this bad news. They're trying to tell us there's a crash. They're trying to tell us landlords are selling up all over the place. They're trying to give us all this bad news so that we sell up. And then these big guys mop them up. Why are they looking to mop up these properties? Because they know that over a 5-year, 10-year period, these will be high quality assets to own and income generating all the way. So my recommendation to you is don't follow what they say in the BBC, the Daily Mirror, or the Guardian. Follow what the big money is doing. See what Warren Buffett's doing, see what people like Lloyds Bank are doing, and follow their investment strategies over the next couple of years. Now, there's one type of property that is due for a crash, and that is commercial property. Goldman Sachs have predicted a 20% fall in commercial property values, buy-to-let commercial property values over the next couple of years. And that's because basically there's a massive oversupply of commercial properties thanks to the recession. And also, of course, a liquidity crisis in pension funds in the UK has meant that these guys have to divest of commercial property assets. So the massive opportunity for 2023 is to simply take commercial properties, which are going to be in abundant supply and relatively cheap because they're defunct and they're limited buyers and renters for these commercial assets right now. So to take these assets and to use the government's permitted development rights, and permitted development rights allow you to convert these commercial assets to residential properties without going through formal planning permission. And so if you can take an asset class which is falling in value, which is crashing in value, convert it to residential use without going through planning permission. Residential use meaning single flats in a block, to rent out, then basically in a recession, you'll be achieving a huge capital uplift plus cash flow, positive cash flow for as long as you own those properties. Now, I've only given you a snippet of all of that. If you want to get started in this amazing strategy for 2023, I run a whole host of taster workshops, 90-minute masterclasses to explain this strategy to you and share with you some case studies and all of that. You can join us for free, propertyworkshop.com. I'll leave the link in the description. Join us on our next 90-minute free masterclass. Tell me what you think. Do you agree or disagree? Where do you think the market's going in the UK? Let me know in the comments below. Smash that like button, subscribe, hit the bell icon, and see you guys in the next video. High streets across the land are changing forever. Basically, there's an oversupply of retail premises. Shops are closing down, more are going to close down in the future. The government know this, and that's why they're introducing a light touch planning system which allows small developers to easily repurpose these buildings to residential use under a light touch planning regime called permitted development. Now, this is going to be the biggest revolution and the biggest change and the biggest opportunity for property investors that I've ever seen. And this is all coming into effect on 1st of August. So you need to know what's happening and what properties to look for to take advantage of these opportunities so that you can get in there and take that first mover advantage. I've got a 90-minute free masterclass to get you ready for August the 1st. Make sure you join me, click the link below. Whether you're a beginner or expert, we'll get you started.